If you're running your business out of your personal bank account, you're paying more taxes than you need to and making your bookkeeping a nightmare. Today, we break down the simple ways to stay organized.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal,
hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
All right, so now we are going to talk about one of the foundational pieces that we want to make sure everybody starts when they want to hit the ground running. And it seems simple enough, but have a business bank account.
You're right. It does seem simple enough. Okay. Tell me more.
And that's, like I said, especially when you have things kind of going all over the place and, you have something that suddenly blows up. You weren't really expecting anything to happen. It can take a lot to go to the bank and appear in person, and you have to schedule a call. I mean, I don't know. They want all kinds of ridiculous things.
I don't like leaving my house. So yeah. No, that's fair.
Yeah. So there's a couple of different scenarios, but I think even before you open a business, it is still possible to either open up a separate checking account, and that's where all the business income goes into, or you can create a sole proprietorship account. A lot of the banks will allow you to create a business account, but it's all under your name and your social security number.
Oh, but it'll actually be like a legitimate business account. Okay.
So, and it's built, like I said, just for sole proprietorships, because that's really what you're going to be classified.
Gotcha.
Which is the classification before you actually go to the state and start filing paperwork to really create that business.
Fully set it up. Okay, cool. So how many accounts do you need when you're setting out a business?
Yeah. I mean, really, if you have one and you put all the income in there, we're good.
Okay. Okay.
That's definitely really, really helpful. So, you can also have, I like to have maybe a tax savings account, something. There's a lot of different methods, but really it all boils down to put money somewhere where you don't see it.
Gotcha.
And then that way it's not included in your kind of planning and you don't miscalculate anything, because you want to be able to just go into the bank and see immediately, where am I? What do I need to do? And how do I move forward? So especially if you're collecting sales tax, keeping that sales tax separate, because sales tax are one of those trust fund items. So if you don't pay your sales tax, it's not going to be a good time. So making sure that you are withdrawing those sales taxes, putting it somewhere where you can't see, and then also some tax savings. And especially in the beginning, maybe you don't necessarily need a whole bunch of tax savings because you've just spent so much money investing in getting everything up off the ground.
Yeah.
But it's still good to do that because you're still creating a nest egg for yourself.
Yeah.
And if you're doing your bookkeeping consistently, you can see that you have a loss. So then there's not going to be any tax implications there. And I normally say, save this amount, put it in your tax savings account. And if that's difficult for you, then we're probably in a scenario where you don't need as much money in that tax savings account. But still making sure that you are working with a tax professional to make sure that you are ahead of the game, because it's not unusual for a business owner to get a call at 10 o'clock on tax day and say, okay, well, it's $25,000.
Yeah.
What? And also keeping in mind that you do have to pay your taxes on a quarterly basis. So it's not due, your taxes aren't due in April. Your taxes are due in 4 equal installments, and then you just pay the remaining balance in April. It's not like you can just pay the full amount in April. So making sure that you're already kind of aware of the amounts that you need to save for your taxes and having that set aside would be good. So and normally I say with those, having it at a completely separate banking institution, putting it into a high yield savings account so that while it's sitting there, it's still earning money for you. And then also if it takes a couple of days for it to go from account to account, then it definitely helps you kind of with your operating so that you're not constantly eating into these other bills.
Gotcha.
You know,
cool.
So definitely I say having the business account and then also some kind of tax savings account, preferably in like a high yield savings account somewhere.
Okay. And what about, because we work with majority creatives. So what about those that come to us and everything is mixed? What do they do? Yeah.
So we want to make sure that you get everything separated as quickly as possible because we want to consider especially things that are kind of on the edge.
Okay.
You know, so like I said, like paintbrushes, that could be entertainment, that could be your supplies, but you know, like how do you differentiate from that? There's certain like Amazon purchases, Costco purchases, you know, if you're getting water for everybody and, you know, because you're doing an installation or something, you know, you need to get food for everybody while they're on set. Those could go personal or business. And especially now, I mean, the IRS is really backed up and they don't really have time to go through and investigate every single teeny tiny thing. So if you are submitting a receipt and you called it business, but it's actually personal, there's a chance they're not going to take any of it.
Gotcha.
So especially like meals, if you're using a personal account and you're commingling all of those business meals, I'm just going to cut them all out. I don't have time to sit there to go through all of these things because you didn't take the time in the beginning to make sure that all of your business meals were completely separated from your personal meals, because now I have to spend hours and hours saying like, okay, who was the person that you had lunch with? What did you talk about when you did lunch? You know, all of those things. So that's really the biggest issue is when you're doing what we call commingling, there are some of these categories that very easily the auditor will just say, you know what, I'm just going to get rid of all of them because I don't have time to look at this.
Yeah.
So
that would not be good.
Right. So, and it's not something that can't be taken care of. So like you said, in the first year, it's about making sure, you know, you have a QuickBooks account or some sort of accounting system that you're using, whether it's QuickBooks, Xero, Excel, what have you. And then also when we're doing that, we're taking a look at maybe individual transactions. And in that first year, we're probably going to have to be a little bit more specific and have as much documentation as possible because there is that big mix of items. And then, like I said, just really, really, really careful that none of the personal stuff gets mixed in there. Because, you know, if the auditor says, okay, you have 100 transactions, I'm going to pick 5. And out of those 5, 3 of them are personal, it's gone. That whole entire category. Just don't even plan on it.
Okay. So with them being separated, so let's say you have your business account, you got your personal bank accounts. How is there like a rule of thumb of how often to move funds from the business account to yourself personally? Like, is it on a case by case basis? Like how should people move the money since you have them separated?
Yep. Yeah. Because like you said, if all of your income, everything is going into the business account,
you do eventually want to get that money.
Right. Yeah. How do you buy groceries? How do you do everything? And a lot of that, it really depends on the structure of the company. Okay. So when you're a sole proprietor, really that's just you. So you can transfer money really freely between the business account and the personal account. Okay. So that's why, you know, you can transfer $200 into your personal account, buy groceries, and then you only spent $150. So transfer the $50 back to the business account. That's totally fine. Okay. You know, it's just when you are, I would say if you are a C corporation, you have to be really careful. And then also if you are a partnership.
Gotcha.
And that's just because under a partnership structure, you are beholden to more than yourself. So just making sure that everybody is aware and agrees with how the funds are being used, So with like an S corporation, a partnership, a sole proprietorship, a lot of times you can transfer money over to yourself. An S corporation, and a C corporation, you do need to do the payroll side of it as well. So there's definitely ways to get the money out of the business checking account and into your personal checking account. And like I said, a tax strategist, while you're working through that will help you.
Like your best strategy for it.
Yeah. But when you have maybe a single member LLC or a sole proprietor, you don't really have to worry too much. Just it's more about making sure that you're not taking out so much money from the business account that the business can't pay for its bills anymore.
Yeah.
So that's really all that I'm looking for is, if it takes $7,000 every single month to pay for the business expenses, then I'm going to want to see at least like a balance of $7,000.
Yeah.
And then everything else you can kind of take and use personally.
Okay, cool. I think this is a question that I get, and I never quite know how to answer it when new people come on, but they're going to open up a bank account and they're like, which one do I even do? Like, how do you usually navigate that? Because I know like there's so many, and I'm sure it's case by case, but yeah, like how do you usually like help answer those?
I mean, really, sometimes it's more about lifestyle questions.
Okay.
If you're already banking with a certain bank, sometimes it's easier where you can just open up an application online or give them a call and they'll open up a new business account and you don't have to do anything. So especially when you're starting out, it doesn't necessarily matter. I do know that there's different issues that can happen with some of the smaller institutions where we're trying to link with QuickBooks and things like that.
Those are fun.
So, I mean, really, it's just more, act like a business owner. If you're going to get a deal where they'll give you like a higher interest rate or they'll give you a bonus, because there's some where if you have a certain balance in your business savings account, they'll give you the 5% APR just by keeping it in there.
Yeah.
And then you can bank with them, or if they have like a bonus where they'll give you, $300, $500 for opening the account and what have you. So, just kind of doing like that. But at the end of the day, I mean, they're all just the same person with a different mask on most of the time. So it doesn't necessarily matter. It's just more where can you go where you will actually be able to use the account and then be able to just make sure that everything goes there. Because sometimes you have like the online banks where they might be a little bit difficult to use, or like we have some where they open up like a million different mini accounts and then you have to, it expands all of your bookkeeping and things like that. So it's just kind of mainly looking at operationally and then also what's the easiest for you and for your clients. And then that's how we decide. But at the end of the day, you just need one. It doesn't have to be special. It doesn't have to be anywhere
just
particular. Just have one. Yes.
Okay. No, I love that. So basically, if someone is currently commingled and they need to like get up out of that, it's really just go and get a business account set up, and then I guess work with your accountant to how to separate out the things you've done already, and then just kind of go from there.
Right. Make sure that you have the receipts. Make sure that you have like a reason why you made those purchases, and everything is really, really clear, especially in that first year, and then be really good kind of moving forward. And the same thing. I mean, we also get questions about credit cards.
Yeah.
A lot of times. So, like I said, the IRS is looking for you to make decisions that any other business owner would. So if you are using a credit card and you're getting a whole bunch of travel points, okay, that makes sense,
Yeah.
And in a lot of cases, the IRS, I mean, they look at legal ownership, but they're also looking at the intent. So even if maybe the credit card is legally in your name and under your social security number because you're able to get like a higher limit on the credit card or better points than if you went for a full business credit card, you still want to make sure that the way that you are using it and the way that you intend for it to be used is 100% for business.
Gotcha.
So, because they're not lawyers, they're not, and I mean, even the opposite. If you have a business credit card, but you're only putting personal items on it, then they're going to treat it as personal, even if it's under the business name. So, a lot of it's going to be how you're using it. So if you have a credit card, just making sure that it's like 99% of the time used for business purposes. And then if something does slip through the cracks, we want to treat it like you would if you were working a W-2 position. So if you were working for an employer and you purchased something on your personal accounts, you would make a request for a reimbursement. You would give them a copy of the receipt. You would ask for the funds. And so you're going to do that same process to yourself. And they call it, kind of opening an accountable plan. Sometimes it's called that. But so even if you have a business credit card, you have a business bank account, but something goes onto one of your cards again, because maybe you got extra travel points using that card. That's not the end of the world. You just need to make sure that you're following this process of getting reimbursed for yourself. And then just making sure that you're not commingling as much as possible.
Nope, that makes sense. Awesome. Okay.
So I know sometimes it can be a little bit of an early step, but definitely getting that business account and really assigning one of your credit cards as only for business as early as possible really helps. It relieves a lot of your headaches, especially during tax time. You know where all of your stuff is. So then you're not trying to sift through all of this stuff and worrying about, is there a deadline for the accountant and can I get this in time and all of that fun stuff. So just making sure that you are keeping everything completely separate as much as possible, even in those early stages, is going to be in your best interest. And like I said, even if they charge you $10 a month to keep open a tiny business bank account, it's going to cost you less than if you have to pay a tax accountant to spend the time to run through that. Or if you're so busy that you're late getting all the information and you're just trying to rush through it and you miss things. So, really having that business bank account and keeping everything separated is going to be the most important first step when you are opening that business.
That makes sense. Okay. Well, thank you for explaining it all to us.
So if you have any questions about this first step and then also the other steps so that you can set your business up for success, feel free to put a comment below or send us an email and we can talk through your particular situation. Thanks.
Bye, guys.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.